Hey, social media, happy new year, happy 2021. Well, guess what? You know what time of the year it is, and it is tax season. And I want to give you a few quick tax tips to help you pay less in taxes. Now, if you're watching this video via my story on Facebook, you know this is a short clip. So, to watch the full video, I want you to head over to my business Facebook page at This Is Why Inc. to get all 5 of these tax tips that are going to help you save money this year in your tax liability. So for those of you who don't know me, I'm Kenite McCray, and I'm the lead visionary of This Is Why Inc. We are a Christian business building company that helps individuals and small business owners find their purpose and prosper in it. Now, for today's segment of Money Matters Mondays, What Matters in a Minute, I'm going to give you 5 quick tips that's going to help you pay less in taxes. So, tip number 1 is home business or home office expense. There is a deduction that you can take if you're a small business or individual and you work out of your house. Yes, you can write that off on your taxes. The problem is a lot of people think that they can write off all of their home expenses, and they can't, so they don't end up writing off any of the expenses. But the way that this works so that you can do it correctly, because if you know my motto is make the most money, pay the least in taxes, and stay out of trouble with IRS. So the way that this is done correctly is what you write off, or what is eligible, is a percentage of the square footage that you use within your home to conduct business. So as an example, if you live in a house that is 1,000 square feet, and you have an office or whatever the space is where you conduct business is, let's just say for the sake of numbers, 200 square feet. Well, that means you can write off 20% of the cost of living in your home expenses. And that includes utilities and insurance and even mortgage. Although mortgage gets a little tricky because it's the mortgage interest that you can write off, not the principal, okay? So tax tip number 2 is your cell phone and cell phone service. A lot of people know that they can write off their cell phone service expense, but you can also write off the purchase of the equipment, which is cell phone. And if you're Apple person like myself, you probably have to update or renew or upgrade your phone maybe once a year, even though I don't do that. But a lot of us do. We want the newest phone and we upgrade, but you can write that off as well. So make sure that you're writing off both the actual phone, the equipment, that's a business expense, as well as the cell phone service. Tip number 3 is meals and entertainment. So we all know that we can write off meals and entertainment, but what a lot of people don't realize is that in the past, you can only write off 50% of your meals and entertainment. Well, thanks to 2021 and COVID, we can now write off 100% of our meals and entertainment expense. Not that we were able to go anywhere and do anything anyway, but the deduction is now 100%. But let me caution you on that. What is considered a meals and entertainment according to IRS is any meals and entertainment that you incur while conducting business. So meeting with clients, or staff meetings, working with your employees, staff events and gatherings, outings, conference, workshops, things like that incurred a meal or some form of entertainment to boost camaraderie or whatever the case may be. Those are the things you can write off. And as just a quick tip, I want to tell you, when you incur these expenses, what you should do is write a note on your receipt. If you go out to dinner, go out to lunch, and it's a business dinner, business lunch meeting, write on the business receipt your name, the names of those persons who attended, and maybe just a quick note about what the business meeting was all about. Tax tip number 4 is your mileage versus your gas. So most people know that they can write off the gas that they spend for driving for business purposes. But a lot of people don't realize that mileage is also a big tax savings as well. And so this is where regular bookkeeping and keeping track of your expenses and your business activity really come in handy, because it may be best to write off gas or mileage because you cannot write them both off. So if you decide to choose mileage, you can't choose gas or write off gas. If you decide to write off gas, you can't write off mileage. And you may, based on how many miles you spend, depending on your business type, prefer to write off mileage and get a greater write off and a bigger deduction. So there is for business activities, driving for business purposes, that's going to and from meetings and business luncheons, things like that. It's 57 cents or 57.5 cents. Okay. What some people don't know is that you can also write off the mileage for going back and forth for medical purposes as well as for doing charitable activities. So for business, it's 57 cents. For medical purposes, which means you went to the doctor or things like that, you're a business owner, you can write off that mileage. It's 17 cents. And for charitable activities, it's 14 cents. So when you add that up and think about how much back and forth hitting the road you do, you may spend more in mileage expense than you do in your overall gas expense. So it's very important to weigh the options and see which one works best for you. Tip number 5, business interest. Now, as a result of COVID, many of you have taken out loans or have already had loans and you cannot write off your principal that you pay every month to pay that loan back. However, what you can write off is the interest on the loan. And if you have any new loans out there or loans period, you can write off the business interest on loans that you have for monies that you receive or loans that you've taken out to support your business. Now, that may be a vehicle. Maybe you have an auto loan for a vehicle that you use specifically in your business. While you can't write off the car note, you can write off the interest on the loan. And again, if you took out any loans this year to support your business during this crisis and to keep cash flow up or, at a working optimum, you can write off the interest on that. Now, I do have one bonus tip, and that is it's the Business Tax Cut and Jobs Act. And what that does is give you a qualified business income deduction. A lot of people don't know about this. And so if you're out there and you need some support and want to find out and make sure that you are taking account for all of the business write-offs that are available to your specific business, you should definitely give us a call. And again, our number is 301-719-2424 and our website is www.ti-y.com. So back to that, like I said, little known bonus, the Tax Cut and Jobs Act. It allows qualified business income deduction. And what that does is it allows you to take up to 20% of your business revenue and write it off as a business deduction. That is major. And let me give you just a simple example. If you made $100,000 a year, that means you can write off up to $20,000. Now, there are some loopholes to that, but a good accountant or a great bookkeeping company can teach you or organize your expenses in such a way that you can fall into the category and write it off properly. And guess what? We're here for you if you need some help. So these are a few of the tax tips that I wanted to run by you so you're not leaving that money on the table and paying IRS an interest-free loan and getting back or maintaining your business cash flow. Once again, I'm Kenite McCrae with This Is Why Inc. and you're watching Money Matters Mondays, What Matters in a Minute. Until I see you next time, be blessed.